Welcome back. And in our top business story, oil prices fell as much as 3% on Tuesday after both the world's energy watchdog and OPEC revised forecasts, signaling that the global crude glut could persist for much longer than expected. The International Energy Agency, which advises oil-consuming countries on their energy policies, said a sharp slowdown in oil demand growth, coupled with ballooning inventories and rising supply, means that the market will be oversupplied at least through the first half of 2017. The IEA's comments follow a bearish outlook from the Organization of the Petroleum Exporting Countries on Monday that also pointed to a larger surplus next year due to new fields in non-member countries. OPEC also said that U.S. shale drillers are also proving more resilient than expected to cheap crude. Ras Al Khaimah Tourism Development Authority expects to report an average hotel occupancy rate of well above 90% over the Eid Al Adha holiday, with many of the Emirates' hotels now at full occupancy. While the UAE continues to be the biggest source market for visitors to Ras Al Khaimah's hotels during Eid Al Adha, the second largest source market is currently Germany, followed by the UK, Russia, and Scandinavia. Ras Al Khaimah Tourism Development Authority recently announced that so far in 2016, the average occupancy rate of its hotel portfolio was amongst the highest in the GCC region, at 70% from January to July. In addition, the authority revealed that the total number of tourists visiting Ras Al Khaimah is increasing by more than 7% year on year. Regional advertising agencies are expected to miss out on a recovery in spending this year as a weak oil price weighs on consumer spending. According to Zenith, a media service network owned by Publicis Media, it has reduced its MENA spending by 6.3% from June, adding that there will be an 11.8% fall this year in overall advertising spending. Money spent on advertising is projected to dip over the next 2 years, averaging about a 7.8% decline annually, with regional political instability also acting as a drag on the market. The IMF expects the weak oil price to hit government spending, with the UAE economy expected to grow by 2.3% this year, down from 4% growth last year. The advertising market for the MENA region is worth about $5.5 billion in net revenue, according to a report from Northwestern University in Qatar, while the industry has had a compound annual growth rate of 2% over the past 5 years, representing only a mild growth. The region's emerging digital market remains widely untapped, although mobile advertising spending is projected to grow by $81.3 billion over the next couple of years, 7 times more than the combined growth of traditional markets such as television, radio, and cinema. In MENA, the digital market currently only makes up about 10% of advertising spending, compared with 30 to 35% spent on print. Leaders of the global gold industry have called on airlines and aviation authorities to ban the transport of the precious metal as hand luggage to reduce the risk of smuggling, which is said to be costing billions of dollars a year in lost government revenue. According to a local report, they want gold to be shipped only as hold cargo, which would allow for proof of responsible sourcing and lift what is regarded as a threat to miners' employment and mining companies' profits. Delegates at the Africa-Dubai Precious Metals Forum, held in Ghana, agreed on a call to action to airlines, air transport companies, and the global air authorities to ban the handheld personal carriage of gold in favor of adopting a cargo-only policy. The cabin transportation of gold is generally legal around the world, subject to airline weight restrictions and customs regulations, with gold bars and finished jewelry are often flown between manufacturing and retail centers, including Dubai.